What's the difference between market value and assessed value for your property taxes in Florida? Hello guys, my name is Chris at Hauseit. I'm going to go over this example today using some real live property tax examples in the county of Miami-Dade. So for any county, you can just Google, for example, Miami-Dade property taxes or even Miami property search. You'll usually get to the county property appraiser's website. It's a public site. You can search by address, name, even the folio number, which is like the property ID number, very easily. And you'll come upon a page like this. So this is an example in a condo building in Edgewater. And you take a look, you search by the unit number, and then you'll quickly come down to this very important section, assessment information. And you'll see market value for the current and basically 3 years worth, and the assessed value. So these are different, and you'll see here in 2022 they were actually the same. You'll see there's in terms of benefits, so this one doesn't have the homestead exemption or the Save Our Homes cap, and by default then it would automatically have this non-homestead cap, which if you take a look, it's basically an almost 10% cap that automatically applies to anyone without the homestead exemption or Save Our Homes cap. It's basically like a 10% cap. Now keep in mind, it excludes the school board assessments, which is about 30% roughly of your property tax. So the school board portion is uncapped. But otherwise, you have some sort of a cap, even if you don't have the homestead and the Save Our Homes cap that comes with it. So if you take a look here, basically this market value is essentially what the county appraisers assess it as, what they assume a market arm's length transaction would price your property at. And they do give perhaps a small leeway versus what it might actually sell for, the most recent comp. And I'll give you an example as well. But before we do that, let's quickly go over assessed value. Now assessed value, you can see it's a little bit lower here. This is what you're actually taxed on. And this value is lower due to essentially the non-homestead cap. And if it had, for example, a homestead exemption, it would have a Save Our Homes cap. So we'll give you an example of that shortly. So you see here another unit in the same building, and you see here the dramatic difference. This one has the homestead exemptions, which lower, as you can see here, they lower the assessed value by $25,000 and another $25,000 for a second homestead. That's small when you're talking about multi-million-dollar properties. What really kicks in the second year, so the second year after you get your homestead, so year one you get homestead, the second year the Save Our Homes cap kicks in, and you can see here yourself, this is really the most critical one if you are able to get it in time, because it caps essentially your assessed value increase to a maximum of 3% or CPI, whichever is lower, so basically 3%. Which is very powerful. And you can see here the massive amount of reduction relative to the homestead exemption. And you can see here, because it's 3% max capped, it doesn't show when they got this exemption, but presumably at least in this tax year 2022, because you can see the rise is, I would guess, to be approximately 3%. So, and this is what the tax is based on. So when they have the annual property tax, you'll see it in the trim notice. This is like every year in August they come out with the trim notice, and it's an estimate of your upcoming property taxes for that year. And you take a look, these are the various millage rates. They're essentially like, you can view these as percentages, right? Quickly, millage rate, it's taxable value. It's basically dollar assessed for each $1,000. So when you see 4.57, that's essentially 45 or almost 46 basis points. So in easier to understand terms, it's 0.457% of the assessed value. So these add, I would guess, to approximately 2%, which is roughly what property taxes are on the assessed value. Anyway, this perfectly illustrates the difference. So this is the market value, what the county appraiser assumes it would sell at as of January 1st of that tax year, and in an arm's length transaction. But this is what you're actually taxed on. So these millage rates that we just took a look at, say it's around 2% of the assessed value. It's 2% times your assessed value, which is much more advantageous to this homeowner versus the market value. See here in this other example, this person does not have the Save Our Homes cap, so they only have the non-homestead cap. It increases but at a faster rate, but still it hasn't caught up to market value yet. So there you have it. We hope you found this video helpful. We'll include some links to some more detailed videos on articles about property taxes. We'll have a follow-on video shortly about what to do if your property taxes don't seem fair, or if it seems you're being assessed at a higher value, or usually the market value is higher than comparable neighbors. What to do in that situation and what the reason might be. So stay tuned for more. We hope to hear from you. Leave us a comment below if you have any questions or thoughts. And remember, we at Hauseit can help you save 2% or more on your purchase by giving you a commission rebate on the buyer's agent commission. It can be substantially more than just 2% back when you buy. For example, new construction in Miami can often offer 5, 6, 7, or even more percent of the purchase price, which we can give you 2/3 back. And of course, when you sell, we have a DIY listing service that's essentially free, or you can use our full service for approximately half the cost of a traditional 6% listing arrangement. This is Chris at Hauseit, and we'll see you on the next one.